Since part of our channel deals with investments, I decided to make this video in which we'll cover the current tensions between Russia and Ukraine, what this means for you, and how it will affect the entire economy in the upcoming period. Whether or not you have followed recent events, you need to be aware that the current situation has the potential to affect everything from banks, stocks, cryptocurrencies, and even interest rates, as the market generally continues to fall. For example, we can already see that the market is falling quite fast and in huge percentages, leading to the most famous index S&P 500 entering a correction for the first time in 2 years. The price of oil is currently the highest in the last few years, Bitcoin has fallen below 37k, and the logical question arises: how much worse can it get, and is this just the beginning? Today we will try in this video to cover everything you need to know about the future of the market, your money, and the economy. Don't worry, I will try to stay as neutral as possible on topics like this, and I will only speak objectively using facts. If you appreciate the latest information and want to support the growth of the channel, it will really help if you like this video and subscribe to my YouTube channel. With all that being said, let's get started. Okay, for all those unfamiliar with the situation, here's what's going on at some basic level between Russia and Ukraine, and why it's important to understand this whether you live in the UK, Germany, America, or any other country. For those who don't know, until about 1991, most of Europe was controlled by the communists who ruled the Soviet Union, and at the time of the collapse, Ukraine had the largest atomic arsenal, ranking third in the world. The result was negotiations between the United States and Russia with Ukraine to disarm and remove nuclear weapons in exchange for American security, which will protect them from a potential Russian attack. However, in 2013, Ukrainian President Viktor Yanukovych rejected an offer that included integrating their economy with the European Union, under suspicious pressure to sign an agreement with Russia instead, although this proved to be a very unpopular decision as the Ukrainian people protested. Russia has seen this and has become concerned about the potential cooperation between their neighbor Ukraine and the Western forces. For that reason, the Russian army took over the Kremlin. The sparks are getting stronger because the original agreement not to attack has been broken. Now, let me introduce you to an organization that you have probably all heard of. It's the North Atlantic Treaty Organization, or better known to all as NATO. This is an alliance and agreement between countries that aim to resolve military and political conflicts and build partnerships and support the security of the North Atlantic. In order for a country to become a member of NATO, there must be an unanimous decision among all NATO members, and the core agreement is Article 5, which means that an attack on any NATO country is an attack on the entire alliance. In other words, if Ukraine becomes a member of NATO and Russia invades Ukraine, it would mean that Russia has attacked all 30 countries, and this would become a global problem, not to mention the official Third World War. The problem is that Russia wants to gain more control and influence in the region, and Ukraine wants to be an independent country, and this leads to logical disagreements. Ukraine previously applied for NATO membership back in 2008, and unofficially they were promised that they would soon have a chance to join NATO. In Russia's eyes, this meant that the entire western border would be controlled not by Ukraine, but you guessed it, by America and other NATO member states. However, that was just the beginning. In order to reduce tensions between Russia, America, and Ukraine, the negotiations didn't go so well, as Russia sets demands that the United States and most of NATO could not comply with. Russia is demanding a ban on Ukrainians' application in NATO and prevents any military activity across Eastern Europe. At the same time, Russia is increasing its military presence near Ukraine, and America's response is that they have, so to speak, accumulated over 100,000 troops, with the implicit threat that they could use force if their demands are not met. By the end of January, the United States has opened a dialogue that Russia should accept. However, tensions have been mounting and negotiations have not gone well, and even more so, the situation in the past few days has been catastrophic. In response to a potential Russian invasion of Ukraine and penetration deeper into the region, the United States sent troops to the Ukrainian border in support of the European Union, cut off Russian debt financing, and Britain announced targeted sanctions against banks and wealthy individuals to freeze assets. Potentially, many more sanctions could come. To simplify, for many years there have been disagreements and tensions between Russia and Ukraine, and as Ukraine draws closer to Western forces, Russia has threatened to use force to regain control. Although I'm not qualified as a person, and if you are interested, I'm totally apolitical and you will probably find a detailed analysis elsewhere, I just gave you a basic understanding of the problem to get to what interests me as an investor and all other investors. How this connection between Russia and Ukraine will affect the economy and the market, because many more things are happening that we can see. First, we have high prices, which you have probably all noticed, especially when it comes to oil and gasoline. 2 days ago, it was announced that oil reached a record price of $100 per barrel. Why? Well, because of the potential war between Ukraine and Russia, and taking into account the fact that Russia ranks third in the world when it comes to oil production. Given that Europe receives almost 40% of gas and 25% of oil from Russia, it's natural that prices will go even higher. Russia's influence on Europe is expanding even more, according to a Reuters report which said that over 90% of US neon semiconductor supplies come from Ukraine, while 35% of palladium comes from Russia. That is why we see a delay in the production of cars and a shortage of parts when it comes to computers, telephones, video consoles, electronics and solar panels, or simply everything that has to do with the computer. In addition to high prices, we are afraid of high inflation. For those who don't know, inflation means year-over-year price increases. In order for inflation to continue to rise, it's necessary for prices to continue to grow at the same rate. Due to Russian-Ukrainian relations, there are fears that prices will continue to grow at the same, if not faster rate. The CPI, or Consumer Price Index, is an index that measures the rate of inflation. Oil and gas take a huge percentage of this index, and if the price of oil continues to rise due to international tensions, it will absolutely affect the inflation rate. You have probably noticed that the price of used cars has jumped. This is because there is a general shortage of chips and the production of new cars has slowed down, and you have to wait at least 12 or 16 months to get a new car. Both of these factors, high prices and high inflation rates, lead to a snowball effect, which is the number 3 factor related to high interest rates. In one of the previous videos, we mentioned the Federal Reserve, which aims to lower the level of inflation to an acceptable level, which is currently a record in the United States for the last 40 years. They want to lower inflation by raising interest rates, but there is a problem. Assuming that the state's economy is on an upward trajectory, the following trend is emerging. People will spend more money, the unemployment rate will be low, and the interest rates will rise as prices continue to rise. However, due to mentioned tensions, people are worried that there may be a greater spike in prices for the reasons we just mentioned, leading to the fact that the US Federal Reserve must take even stronger actions, which means reducing the value of shares in the securities market. As interest rates rise, most portions of the market begin to be sold, and since tech companies make up a quarter of most of index, they are hit hardest, and that's why we see a huge drop in stock prices like Facebook or Meta, Tesla and Microsoft and other technology companies. In the end, we have uncertainty. What the market hates the most is unknown. When inflation is higher than expected, in combination with unpredictable moves by Russian and US military forces, stock prices fall significantly. Although we are not sure what the epilogue of the whole situation will be and how this can be easily resolved, what I can tell you from the investor's point of view is that historically speaking, every time a market crash is caused by political factors, the average market crash is 5% and the average market recovery is 47 days. Some experts say that shares fall more caused by the probability that something bad will happen than when the actual event happens. What is the conclusion? If you ask me, this is a great buying opportunity. Why? When you buy shares, you want to buy shares of promising companies at a good price. You don't just want to find cheap stocks and buy them, not knowing what potential or debt that company has. I will definitely buy shares, and I think it will be a long hold in the next 2 to 3 years until 2025, when the return on investment will be huge. Historically, after each market crash, the market has recovered and continued to grow. I'm not saying that I predict the future, no one knows that, but based on facts from the past and previous market crashes, it will be my financial decision. Remember, I'm not a financial advisor, I just share my opinion. And in time like this, when a crisis is happening, a great opportunity is offered to grab your first free stock worth up to $1,000 if you sign up for the Freedom24 platform using the link in the description. Given that the stock market is a high-risk market, especially now that there is international political tension and the potential for war, Freedom24 has provided you with free shares. Also on this platform you can see the Savings D account, which translates to a savings account where you get a 3% savings interest rate annually, which is better than the most of the saving interest rates you will receive in the bank. Also, if you buy shares, you have zero transaction costs for the first month. If you already use the gift, share it with your friends or family members, the link is in the description of the video. That would be all for this amazing video. I hope you learned something new and useful and that you will further explore the investment opportunity. If you enjoyed the video, be sure to like it, subscribe to my YouTube channel and follow me on Instagram because I will be more active there soon. I think that the next week I will buy Shopify dropshipping store from Fiverr, we will run some ads and test the store and see the results. I think it will be fun. I will leave you a playlist with other news when it comes to the stock market if you want to see another tutorial on this topic. Until the next video, new education and earnings potential online, big greetings from my YouTube channel. Cheers!